Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So, we need to talk about the US inflation metrics that came out, the CPI numbers. The CPI numbers came out in line, so nothing too crazy, nothing below expectations, nothing above expectations. And we got the stock market to basically react. We had a little bit of some whipsaw action happening where equities went up and then dipped and then went, or actually it dipped and then went up again. And now the market open here, being 9:50 a.m. After the market open, we have a little bit of selling pressure, but again, I expect some whipsaw again and possibly more of downside pressure. When you look at the bond market on the other hand, did sell off initially on an inline number, um, and now we're getting basically a bid more on the longer end than the shorter end. So, what do I make of these numbers here? Now, the numbers came in line. If you look at the on investing.com, the economic calendar, it tells you it's 0.2%. But if you look at the unrounded number, it comes out to be 1.6%. So that number, 1.6%, is basically, you could argue, about 0.2% away from it actually being 0.1%, right? So what does it really tell you? Inflation's more on the softer side. I've been saying this for quite some time. We're seeing inflation deteriorate. We're seeing the metrics show its weakness. And there's a reason for it. And that reason is because we're seeing demand soften and get worse off there. Now, speaking of demand, we have more economic data that we want to keep an eye out on. So tomorrow we've got retail sales. Let's see how demand ends up being for retail sales. Do we get a strong retail sales number or not? Are consumers going out and making purchases, right? If you could guess with how the economy is going and how maybe your budgets are going, you could feel that people are probably spending less. So that retail sales number that's expected to come tomorrow might be weaker than expected. We got initial jobless claims number come out also tomorrow. Now, the last number that came out was a little bit better than expected, and the stock market celebrated that, which was interesting. We have also New York Empire State manufacturing numbers and Philadelphia Fed manufacturing numbers coming out as well. So you're going to get a good idea of the growth side of things, demand side of things in the U.S. Tomorrow. So we got the inflation side. We know that, okay, prices are basically somewhat weak, but how's the growth story playing out? Now, if you also noticed, yesterday, day before, we had the equity markets rally. We saw that on the PPI number, also show soft numbers there. The equity markets rallied ahead of CPI numbers. And don't get me wrong also, that we've been seeing the CPI numbers a day before often get leaked. And they are. And you can see that in the equity markets. They're getting leaked, the CPI numbers, and that's why you sometimes see these moves around, during the day or maybe closer to later in the day or end of the day. So let's get back to the inflation numbers. What does this mean? Let's break it down a little bit here. When we look at the index for shelter, it rose 0.4% in July, accounting for 90% of the monthly increase in this CPI report. So basically telling you that shelter housing is still elevated. It's inflation numbers there. The index for food increased 0.2% in July as it did in June, and food away from home rose 0.2% over the month, and food at home index increased 0.1. So food and shelter, your essential needs, are still elevated, and you're still seeing inflation show up in those areas. In other areas, when you look at let's see, motor vehicle insurance, household furnishing operations, education, recreational, personal care. Those also increased for July. Indexes for used cars and trucks, medical care, airline fares, apparel were among those that decreased. So if you're looking for used cars, you're looking for used trucks, medical care, airline fares. You can expect also airline. Less people are obviously going out and going on vacation. Um, Apparel, you can expect prices to be a little bit better there. Especially, again, I want to go back to the cars, the used cars. If you're in the market for looking for used cars, you can expect to get some sort of discounts. And if your dealer or whoever you're talking to is not giving you that discount, then wait, because it is a buyer's market. You are seeing it in the inflation numbers, and guess what? When things get worse off, you're gonna find some pretty good deals coming up. So again, inline number, what does this mean in terms of interest rates? Now, the markets were expecting about a 50 basis point rate cut in September. I don't think so. I don't think so at all. I think we're still going with the 25 basis point rate cut. I think we're getting one rate cut. And I think this basically solidifies things that, yeah, we're going to get that rate cut. And it's 100% priced in. The 50 basis points, I don't really agree. You got the inline number and you got demand data coming out tomorrow. Let's see how that number comes out, right? If you got strong retail sales and manufacturing numbers, then yeah, that's going to basically give you more assurance that you're not going to get the 50 basis points rate cut. Instead, you're going to get just the 25 basis points. If the numbers really deteriorate, could that change things? The question is, how bad does it get? And I don't think so. I don't think the Fed's going to be so quick to do a 50 basis point rate cut unless something truly, truly changes. Let's also not forget we have the Jackson Hole event where the Fed is going to come out and talk about monetary policy there as well. And in addition to that, I believe that the date for that one is, don't quote me 100%, but I believe it's August 23rd. And you have NVIDIA on August 28th earnings coming up as well. Right, that's going to be important because Nvidia is a big weighting in the indices as well. So if you get pretty bad earnings with Nvidia, you could get quite the sell-off in those indexes. Now, the other thing is with Nvidia, we saw it's Blackwell chips being delayed. There was news last week where it's Blackwell chips being delayed for at least 3 months, so a little bit issues there. Some analysts expect that demand is still there. However, if you look at other stocks, like for example SMCI, and look at other earnings from other companies, they have reported weaker forward guidance. So the question for Nvidia is, are we also going to see the same thing there, which could or could not, but which may cause some selling in its share price? And again, depends how bad it is. That could also affect the equity markets. Now, going forward, data is going to be important. Fed talk is going to be important. We're going to have to see also new fresh data in September, and see what the Fed does during its FOMC meeting. And also before that Jackson Hole event, any clues or hints before the FOMC meeting of some sort of rate cut, the size of it, QE, etc., etc. Obviously, they're not talking about QE right now. It's way too early, but maybe the stop of QT, if there's any discussion of that. I think it's still too early, but any clues for at least the September meeting would be more interesting and something that traders will be looking forward to. So let's see how things play out. It looks like, after the CPI report I'm seeing right now, equities are taking a plunge. We have Bitcoin at 59,000. We've got the bond market moving up. So you kind of got a risk-off scenario here. Let's see how long this plays out, and let's see tomorrow how things play out as well. Anyways, talk to you guys later. Cheers. Bye.